Hi, everyone. I'm Nala Westfold. I'm a steering committee member and treasurer of Premier London chapter. My day job is Principal of Finance and Risk Policy at UK Finance, a trade association for the banking industry. Before that, I was head of risk developments at RBS, now NatWest. Premier, the Professional Risk Managers International Association, provides an open forum for the development and promotion of risk profession by risk professionals, primarily in the financial services sector, but also branching out a little. Today with ACT, we're going to spend some time discussing blockchain. Blockchain combines the openness of the internet with the security of cryptography to give everyone a faster and safer way to verify key information. At its heart, blockchain is a record of transactions, like a traditional ledger, hence synonymous with distributed ledger technology. So today it's great to have four panelists to talk about blockchain, particularly implications and considerations for risk professional and treasurers. If I could maybe turn to the panelists to perhaps start with an introduction on your name and your background, and perhaps linking into your involvement with blockchain and or other sort of innovative technology. And also, if you can maybe finish with your initial take on blockchain very briefly. And so let's start perhaps in alphabetical order with Malcolm, and then Naresh, then Oleg, and then last but not least, Richard. And then I'll sort of start move on to some questions to tease out those initial views that you have, and we'll come back to your final views at the end of the discussion. Over to you, Malcolm, if you can start.
Hi everyone, I'm Malcolm Lees. I have spent 40 plus years working in IT with global clients operating in the financial services and payment sectors, predominantly delivering performance and scalable software applications. This has been achieved by early mitigation of performance risk that results in a lower total cost of ownership through cost avoidance, both directly, for example, unbudgeted capital expenditure, and indirectly, for example, brand damage. This process is defined as performance engineering. For the past 3 years, I was a senior lecturer at King's College London that brought about real-life IT delivery experience, expertise, and discipline into academia by creating a new performance engineering module within the Department of Informatics degree curriculum. Using real-life case studies, students would understand the performance engineering disciplines required to mitigate a software application's performance and scalability risk, thus ensuring they are better prepared for the outside world. From an IT perspective, I am neither for blockchain or against blockchain. Instead, I am concerned with the risk that blockchain might pose. Therefore, I would typically assess and mitigate the performance and scalability risk of the technology used by blockchain, and also the application or products implementing the blockchain technology. In doing this, I can confirm then if the blockchain application will perform, for example, the required response times, the required transaction rates, and whether it will scale, for example, the growth in transaction volumes while sustaining the required response times. All of this in line with a company's business objectives and requirements. Back to you now.
Thank you, Malcolm. That's really useful. Naresh, if I can turn to you now.
Oh, well, first of all, thank you very much for the invitation. It's great to be here today. I've spent 33 years in Treasury, which I thought was quite a long time. Then I heard Malcolm talk about 40 years. So I'm, I guess, quite a new to working compared to Malcolm. In my 33 years, I've spent about 2/3 working in industry. And before I joined the ACT, I spent 9 years at PwC, where I led cash management and payments for the firm. And it was at PwC when I first came across blockchain. We had a very evangelical director called Lord Spence. He was part of a whole load of really interesting working groups. And as far as he was concerned, I think everything in the world can be fixed with blockchain. Now, from that point on, I've been slightly skeptical about some of the claims around blockchain, but I think it's really interesting. And I think my position on blockchain is, my heart says this is really exciting and really innovative. My head says, let's just take a step back and work out what is the real question it's trying to fix.
Thank you, Naresh. If I can turn to you now, Oleg.
Hi, my name is Oleg Laberdev, and I have just over 25 years of experience in financial industry, so spring chicken by comparison to my fellow panelists. So I was working primarily within investment banking and markets businesses, but also have exposure to wholesale and corporate banking. And my focus was always within the transformation, within the business transformation. So I'm very familiar with putting up business cases for new technologies and the implementation and the challenges that the new technologies, bring to the organization. Also, right now, I am volunteering as a regional co-director and chair of Professional Risk Management International Association. Filling my days with leading that London chapter. My link to technology also comes from very early days where I was on the trading platform, or trading floor rather, looking at various technologies that support the trading. My latest experience was with adoption of cloud technology to one of the major UK or international banks. And I'm also a member of Blockchain Council, so I can bring some perspectives through that. Thank you.
Thank you, Oleg. And last but not least, Richard.
So Richard,
spring a chicken, is it?
Richard Cook, I run Lab 577. We sit at the nexus of emerging tech and financial services. I spent time with RBS before running Lab 577, running their strategy and delivering of their strategy on emerging tech, so taking the shrink wrap off quantum, AI and blockchain. Prior to that, spent 20 years in the investment banks before launching out Lab 577 to focus on digital assets and and what we saw as a big disruption to the capital markets system. So yes, a spring chicken compared to the rest of the panels.
Thank you, Richard. So kind of quite a lot of common experiences, different experiences and different views as well over a broad spectrum. Okay. Okay, so if I can maybe turn to Richard and Naresh. How quickly do you think blockchain will be used in the financial services sector, and as well also corporate treasury and risk areas? So right, maybe Richard, perhaps you can start, and then Naresh, if you can add your point of view as well.
I think if you asked the Chief Treasury Officer of Colonial Pipeline whether he'd be using blockchain this year, he'd probably turn around and say, no, that was 2 months ago. He's pretty much used the blockchain already, and we've had it all over the headline news. So this is going to be one of these technologies, much like the internet, where we're very excited about how it works, and we'll all understand about TCP and IP, and then we'll work out how to buy a book over the internet, and suddenly nobody gives a damn about how TCP IP works. And it's exactly the same with blockchain. You're going to see yourself using it, but you didn't realize you were using it because it's back in the back end of the systems, very much in the guts of the financial system. And what you're seeing right now, either following Elon Musk on Twitter or watching the Colonial Pipeline ransomware, is the emergence of new technology, this financial space, and you will be using it. It's only a matter of time.
And I think, Nala, from my perspective, sort of 3 or 4 years ago, probably, a lot of the Treasury conferences that I went to were very much dominated by discussions around blockchain, demonstrations by banks and technology vendors, blockchain solutions. And there was definitely a great deal of interest, lots of people crowding around, a lot of makeshift sort of demo suites, trying to explain how this thing moved. And if you watch the flashing lights, there's a piece of information moving across the world and it's moved already before you blinked. And on one hand, it was quite exciting. It's a bit like watching I'm a sci-fi fan, so watching, the latest sci-fi movie. But I think for me, part of what I've seen and my view is that we've gone beyond the sort of, we've gone past the bit where it all looks very shiny and very new. And what is this new thing? And I think part of where I see a lot of people now is quite skeptical that a lot of the initial promises around what blockchain could deliver, and more importantly, how quickly it would deliver some of these solutions, just hasn't manifested itself. And we still hear people coming up with outdated views around blockchain. If you use the blockchain, things get hacked. So there's still a lot of myth out there around how dangerous using blockchain technology could be. So when I talk to treasurers at the moment, first of all, there is very little appetite around embracing blockchain, partly because most treasurers are very busy recovering from COVID, getting on with LIBOR reform, and basically just keeping the wheels of their businesses running. And so all the ideas and all the sort of projects and promises of blockchain may be great, but it's not something that for a lot of people, it's something they need to focus on in 2021. But interestingly, a bit like Richard, I think that, and again, it's like, you know, these TCP/IP layers, to some extent, there may well be treasurers who are already doing business on a blockchain without actually realizing that that's actually how the information is being carried or the data is being moved. And I think that's my view around blockchain, is that rather than seeing a big bang, we will just see it evolve. And it may be we don't actually use this word DLT or blockchain or whatever. It's just, here's a way in which I can move the ownership of a bond, do some foreign exchange deals that is quicker and faster. And, you know, you can call it, frankly, whatever you want to.
Thanks, Naresh. We'll come back to that foreign exchange a bit later. But before we move on, as a linked question, Oleg, Malcolm, you know, what do you think may be some of the stumbling blocks and risks that you know, treasurers and you know, risk professionals should be thinking about?
Will I go first? Or?
Yes, Malcolm, if you don't mind.
Okay, so it's a new technology, blockchain, you know, relatively speaking, and with new technology comes risk, IT risk. Now, the particular risk in blockchain for me is the new type of database. And, you know, we've been used to sort of relational databases that are very, very mature. They perform and scale, you know, and they can operate under conditions of tens of thousands of transactions per second. So for me, the risk is around security and responsiveness. So I'm only dealing with responsiveness, so performance and scalability. Also, the implementation, you know, how is the technology implemented? It's probably implemented through either a bespoke application or a product, off-the-shelf product. Either way, you know, we need to understand what risk that might pose to the company. So we need to understand, will this database perform? Will it scale? And then we have to take into account the company's business requirements. You know, they have requirements that this application may need to operate at a certain transactions per second, and also require a response time of, you know, less than whatever. And we need to prove that, you know, rather than just put it live and then hopefully, you know, as transaction growth increases, that everything is still responsive. So it's very much about IT risk, but the database itself. And that's something we have to determine whether it can work under the right transaction volumes, you know, currently and into the future, and provide the desired response time back in order that the company can actually conduct its business. We don't want to end up in a situation where maybe on some websites where, you know, you try to initiate a transaction, whatever it might be, a payment, and you just go into a black hole, or you wait, or it says come back later. You know, those are sort of things we're trying to avoid.
Thanks, Malcolm. Anything to add, Oleg, to that?
Yes, I think I'll start first with the answer to how quickly can it be adopted. In general, humans are pretty bad at predicting or making predictions. And typically what happens is that any new change that is coming, we tend to overestimate its short-term impact, and very, very badly underestimate its long-term impact. So I think that the long-term impact of blockchain technology would be quite profound, but the short term was probably not as what a lot of optimists think it will bring. And the reason for that is purely and simply because any change requires business drivers. Now, and typically in the currently cost-constrained environment, what are the drivers, right? You either, want to reduce risks, you want to reduce costs, or you want to increase your top line, where either new markets are becoming available for you or new products. So if this technology can fit any of those drivers, then yes, it will be adopted much quicker. But if it is not offering such benefits, then it will be a bit more challenging. And I think it will stick around in the labs where tech guys play with the new shiny hardware and software, and most probably it will take time before it goes into mainstream. So that's my view.
Thank you, Oleg. Maybe let's pick up on something that Naresh and Richard, you talked about earlier. I know, and I know, Richard, you started talking about that. Which banks and corporates are using blockchain and which areas, and picking up on the point that Naresh was talking about earlier. I saw something about NatWest and Deutsche Bank and a few others trialing blockchain for intraday's FX swaps, and I think there's going to be going to have live transactions in 21, moving on to 22, and across various currencies. What do you expect to be some of the outcomes from that? And is there anything sort of linked into work that you've both been involved in that you could maybe share? Richard, perhaps if I can start with you.
Yeah, no problem at all. So if I look back in 2015, we brought the 5 Irish banks together. We built a distributed clearinghouse. We used the technologies of the day, the blockchains of Ethereum and Ripple. And what we discovered was exactly as Malcolm describes. What about the performance? What about the scalability? One of the best ones was privacy, which was they were delighted to find that they could see their competitors' payment flow, but then realized that their competitors could see theirs. It was like, wait. So what we did was, over the last 5 years, you've seen us pour those finance requirements into many of the projects, Corda being a good example, and they've built what we would describe as finance-grade technology. The technology underneath the covers is actually the same technology that's already used in the capital markets. It's already in the investment banks, it's already signed off, it's already approved. So there isn't a new technology, it's just a reuse of the same technologies, and therefore the risk profile on using this technology is being diminished tremendously. Things like the privacy is being solved, things like the scalability is being solved, and that's a journey, and that has taken 5 years, half a decade to get there, which is why Naresh's point that we've been on these conferences and we've been talking about these proof of concepts, and the answer is yes. And now that technology, rather than trying to change the requirements, has actually had to go and change itself to meet the requirements and the challenges. The FX swap example you saw is a collection of banks that have solved internally how to reconcile data and get it to a single source of truth. But actually, to get out there and reconcile between the banks, the interbank problem, is the next 25 years of cost save. So where we started and why the banks came together at the beginning was to try and reduce the bottom line efficiency, and they are now starting to realize that, and you'll see time and time again these news reports coming out that these aren't proof of concepts anymore. These are live systems that are improving the bank's bottom line through an efficiency play. And that, from an audience here, is really a conversation about, okay, now we need to start seeing the fees coming down. And actually where the banks have now discovered that is going to take 20, 25 years to play out, just as it did when we were trying to get to single sources of truth or single databases inside the house. Really what we're now watching is a recognition by the investment bankers and onwards through the financial system is actually there's a top line play here, there's a revenue play, and it isn't just about cost saving, which is a good thing to go after. This is now a revenue play, and actually that is where what we're starting to see is the emergence of what we would describe as an internet of value. We've spent 20 years building an internet of information, sharing data, email, websites. Now we're sharing value. Ability to send payments over the internet and settle instantly has always been the Treasury Officer's greatest challenge. And when he shakes his banker to make him move quicker and pay less, actually, we're now starting to see that coming to life. And that's really the conversation the ACT members should be having, is with their banker, which says, hey, I've heard about this blockchain thing. I want to pay less and I want it to go quicker. And what's more, I want to know where it is at every point in time. That's the conversation you should be having with your bankers.
And I think that's a really good point, Richard, because I think I'm going to pick up 2 points you've made. One is it just a cost play? And I think the other thing is very often treasurers get presented with a product. And I think what we've missed is really, as a treasury community, going to financial service providers and technology providers and really being very clear and articulating what the problem we face is. Because I typically hear, as I hear with APIs, that it's things like blockchain and DLT, they are solutions looking for a problem. And if I think about one of the challenges that treasurers still have, and which I faced 30 years ago, albeit the products were slightly different, but even today, I know treasurers who at 9:30 in the morning can redeem money off a money market fund, and at 3 in the afternoon, they're still waiting for the money to be recorded on their ledger. And until that happens, there still may be payments waiting and queuing to go out by their bank. Now,
if you go over look at one of our clients, Ivno, they brought to market Mint, which is a product specifically for the Treasury officers, moving collateral instantly, and that, from their perspective, is a solution that they could use today to solve this problem. So you're absolutely right. Those are the challenges we've had for decades, and actually, what we're now starting to see is disruptors coming into the market very rapidly, eating the bank's lunch, where they haven't had a challenger to date.
yeah, and I think it's a good point in terms of the challenge, because if I think about it, I was and continue to be told that for reasons of legacy systems, security, complex infrastructure, once the money's gone into the CHAP system, it will come out the other end, and it will come out today. It's just trying to find it is will not happen. Not impossible, just will not happen. And I've grown up expecting that that's actually not going to change. At home, when I pay my son £20, if he doesn't get it within a minute, he's banging on my door wondering where the money is. Doesn't happen with my £20 million. So I definitely do agree that as treasurers, we need to really challenge the banks and technology providers about what we want to do. And I also agree that we shouldn't get fixated on reducing costs. I think a lot of it is around risk, and clearly risk carries a cost with it. But I think the biggest challenge and the biggest challenge for treasurers is the risk they face with moving money. Trade finance was a great area of risk where we had lots of different components to build some form of trust. And what we've seen, as far as I can see, with things like blockchain technology, is how these technologies can actually take away, reduce the risk, reduce the number of players you need to verify and validate and create that trust envelope. So whilst I'm still very cynical, I do have quite a lot in common with your point of view.
Thanks, Naresh. Oleg, Malcolm, so do you have any sort of observations on what Richard and Naresh have said in terms of, going back to the points you made earlier, Malcolm, and like about scalability and what's coming?
Yeah, I mean, new technology is a wonderful thing. We're moving on and on and on, and it's a bit like when the IT industry adopted Agile some years ago. Everyone thought it was like a silver bullet. I can now deliver my new applications into the operational world in the click of a finger. But there's still things, basic fundamentals that must be done. So there again, we come back to this technology. It has a new type of database. So the obvious thing one would do is to do a proof of concept. And that's making sure that the actual software, the database, all the functionality actually works under the operational conditions of that particular company. And that will be in terms of transaction rates, you know, now and going maybe 6, 12 months in the future, and an expectation of what response times will be. You know, typically you'd say, for this particular function, I need a 95th response time of maybe 10 milliseconds. So there are things you need to achieve in the proof of concept, and then you know, conduct that under sort of laboratory conditions, such that if there is a performance issue or scalability issue, then it can be fixed, and then you rerun the proof of concept to prove that everything is working. The whole point of the proof of concept is to ensure the technology is fit for purpose, but it's within the remit of a company's desired response times and transaction rates. Typically, also the you know, the application that implements the technology itself, you know, that can be done as part of a proof of concept. But you know, if the application implementing the database is functionally rich, then you may have to build a part of that application very quickly, but then we then call a prototype just to confuse issues. So prove the technology works under proof of concept, and you may need to run a prototype to prove that the application that implements the technology actually works.
Yeah.
Oh,
Just to echo that, I think I don't want to be appearing a Luddite and sort of discount a new technology. Obviously, new technologies that solve real problems are more than welcome, and businesses would you know, go for it once they see the benefits. Now, where the challenges often lie is in there is a big difference between the business case and proof of concept, and very often big difference between proof of concept and the actual implementation. Because there are certain conditions that are appearing that is not possible to foresee. And there are challenges with blockchain technology. Look, I mean, and I know Richard, you know, said that there are quite a few, you know, very good examples, you know, where it is used, and not just, you know, for cost savings. But there are, you know, challenges that I see, and they're actually echoed by, you know, Blockchain Council themselves, is that, you know, the distributed ledger technology is inherently decentralized. So there is no need for central authority. However, the financial industry is regulated centrally, right? So, you know, how does it come into play, right? So this is kind of a real issue that needs to be resolved in real life. Now, the other one Richard already touched upon, where, you know, it is an open ledger. So you see what others have and the others see what you have, right? So therefore, there is a kind of, you know, there are certain areas that it can be applied, and certain areas where it's, you know, for example, watch lists or some other things that, you know, people would like to keep, you know, more private because they will potentially move markets. So the third one, which is kind of, you know, been coming out recently, and it's around energy consumption, right? Supporting, you know, that technology, because in a way it is a distributed database, as Malcolm said, and it actually consumes more energy to maintain it than a centralized database, right? And the reason I'm saying that, obviously, I don't think there is a private data that will support it, but I look at more advanced implementation of that technologies, which are cryptocurrencies, and you can see, you know, what's happening there. That there is a concern for over consuming, you know, energy. Then interoperability, I think it's another issue that we need to you know, solve in real life, because you know, you can, you know, implement this technology within you know, one bank or group of banks, but then everybody needs to agree on similar standards, right? So, and the standards are not there yet because there are different implementations. And most probably last but not least is lack of talent that actually would be there to develop you know, that technology, right? Because it is new, it is, and I know that some people have been working on it for a while, but still, in order to have real life implementation, you need to have talent that would be able to support and think about new ways of applying it and developing and supporting these new applications. So that's kind of my a little bit pessimistic view, but I think as with anything new, there is no problems that cannot be resolved. If there is a will, there will be a way.
Thank you, Oleg. I mean, I think Malcolm, Oleg, I think you're probably, it's more a cautionary view rather than necessarily a pessimistic view, isn't it? You're kind of maybe highlighting some of the implementation considerations that treasurers and risk professionals need to think about. Thank you for that. Richard, did you have any sort of comeback on that? I was also going to ask you about, wasn't there sort of a land registry project that was off a couple of years ago? I don't know what's happened to that. Is it up and running? Was there anything from that?
That's a really good example. Just as Malcolm points out, as professionals in this space, we tend to start with a proof of concept, maybe even a prototype, and then onwards to a pilot. And back in 2017, we went out and looked at the home buying market, estate agents, how the FCA was reporting all of this data, and we built a proof of concept to show how the technology would solve some of the challenges. A company, Cogit, took that on. And they've been working very diligently. And what you're referring to is their pilot that they did in 2019. And actually, here we are now in 21, and they are very much solving and they're signing up different parts of that house buying market. But the estate agents, the conveyances, the mortgage brokers, the lenders, they've got all of them as now a network where, to give people an idea, here's an industry that embraced internet and web very early on with the likes of Rightmove and Prime Location, and many of the audience will know these websites because they've used them. But as an industry, 20 years later, they've now realized that they've built what would be described as platform fatigue. They were sold products, just as some of the audience have been sold products and platforms, and come onto my platform, come onto LinkedIn, come onto Facebook, and then suddenly you find you're beholden to them. And you've got this platform fatigue where you're like, oh no, not another platform. You've got a huge number of APIs coming out, open banking, PSD2, great, wonderful. So we're all going to connect each other bilaterally and then it'll all work, will it? No, of course it won't. So what you're actually seeing, and Cogit is a really great example because everybody understands the pain of buying a house. As you go through that process, there is a huge cast of actors. And what Cogit has done is got beyond the kind of connecting of bilateral APIs. They've got beyond the idea that we're in the middle as the hub. Everybody bring your data to us. We'll look after it, but don't worry, we're going to charge you for that. And they have broken that mold and gone beyond what would be described by the VCs as the platform play, and actually created an ecosystem of peers that are using Corda in this case to build a system that allows them to share data throughout their industry. So each of those practice management systems in an estate agent or a conveyance or a lawyer is able to come together and actually go through the deal as one data set all the way along. So I think exactly as Malcolm's describing, back in 2017, we did those proof of concepts. 2019, just as you described, Nala, we've done those pilots, and now if you go to their website, you will see that they have brought together a great cast of UK house buying cast, and actually we are watching now houses being sold across the blockchain, and that for me is the realization of half a decade's work for that team and for the prototypes we were doing back in RBS back in 2017, 2015.
And actually, Nala, just listen to Richard talk here. It reminds me of some of the work I did at PwC when we were helping property companies raise finance, and they would need to be able to verify that all these leases that they held were actually held, and the sort of the rules and the particular specifics around the contracts. And we as reporting accountants need to check them. The lawyers needed to check them. I'm sure there are other parts of that process that needed to check the same pile of documentation. And often these were PDF, very poor scans of documents going back quite a long time. Some of it could have been, you know, quite recent, just very easy to pick out details of PDFs, but there's a huge range of information. And it is without doubt that one of the largest costs associated with property transactions for treasurers and for businesses is the same group, different groups of people looking at the same bit of information and providing a layer of trust on top of it. And just listening to Richard talk, if we do get to a point where we have that single element of truth, which actually the right people can access it with all the right security and privacy, the ability to move some of these transactions much quicker and at much lower cost has got to be really enticing for Treasury folk out there.
No, thank you. That's really useful. Malcolm, Oleg, did you have any observations on that? I was going to then perhaps, given that we've had sort of different views across the different sectors and industries, I'm going to ask you all to think about, you know, what are your thoughts now that we've kind of gone through this? Have you changed your views? It'll be interesting to hear what you think. Maybe I'll start with you, Malcolm and Oleg.
Well, my views don't change at all. As I say, I mean, I can see the virtues of blockchain, but I can also see, you know, we've been hit with this before with new technology, and Richard's mentioned some of these things, you know, that it's like we're doing something totally new, so we don't need to prove this, we don't need to do that, and so on and so forth. I just treat this as new technology and a company that's implemented it, and, you know, they have requirements of that product, not only functionally, but they have a due duty to make sure it performs and scales, which unfortunately there's still a lot of companies out there don't seem to worry about that. So, you know, I would still go through the process of proving the product, proving the technology, and to ascertain whether it's fit for operational purpose. Because it's quite possible that if you can't conduct your business because you can't get enough through transactions through the system, or there's a problem with the database, then how are you going to run your business? And I think a lot of people just jump into new technology, you know, so, oh yeah, this is great, this is the greatest thing since sliced bread, let's just adopt it without doing due diligence. So for me, nothing changes here. You know, from my limited knowledge of blockchain, it seems a good thing, but, you know, we have to prove that it is responsive.
I think that blockchain technology clearly offers a lot of advantages, and it just needs to find the right part of the business to be implemented. Now, you know, I kind of coming back to what I opened my sort of statement, you know, with about underestimating the long-term impact. I remember in 1999 when a new online catalog business was fetching huge market valuations, and then sort of 22 years later, we know what Amazon is all about, right? So it's kind of very, very difficult to see what the outcome would be. And actually, enthusiasts like you know Richard and others who are pushing the envelope forward and, you know, solving the real world problems, I think, you know, with the help of you know, businesses who see the value in this technology, that's what will drive it forward. However, I will, you know, make one more you know, point that very often derails some of the implementations, or at least postpones them. And this is unfortunately technology organizations within big firms, right? Because they have a vested interest in maintaining the balance of the current system, and therefore anything new that comes in and tries to disrupt it, they will defend their turf. So I think, you know, you really need to take them on board and make sure that the current operations are not disrupted by the introduction of this new technology. So I think there is a bit of work to be done there.
Thank you all very much. And I think we are sort of running towards the end of time. Thank you all very much for your time, your views, and also some great examples of, where blockchain has evolved over the years, I guess the last sort of decades, and also some cautionary points from Oleg and Malcolm as well. I think we'll probably now move on to live questions. Thank you all very much.